Investing like a billionaire. So I get asked for financial advice quite often, not just on this channel, but in my day-to-day life. And it's just something that I don't do. I don't give financial advice on this channel, and I don't even give financial advice to close friends and family. And, but I do share what I do and how I invest and how I allocate capital based on my macro understanding and using Austrian economics and the business cycle as a foundation for my analysis. But even with that, the way I invest may not be the way you should invest. The way I allocate capital may not be the way that you should allocate capital. And that's because when I invest in a stock, I've done my research on the macro, on where the business cycle is, and I've identified a sector, and then within that sector I've identified positions, whether it's through companies and stocks or whatnot, and then I'll go about allocating capital into those stocks. Now, I might buy a stock for $1. Now, I've done my analysis and I like that stock. It's undervalued, it meets all my criteria, okay? And that stock falls to 70 cents. Well, that gets me excited. I get excited over that because the market has just given me an opportunity to buy a stock that I already love at a discount. However, most people cannot stand that. They do not have the emotional, financial or investment maturity to handle something like that. So I just don't give financial advice, but I do share how I am investing and how I allocate capital. Now, I recently watched a interview with money manager Felix Zulauf, and Felix, I see eye to eye on the macro outlook, and as he was talking about how he invests, it pretty much mirrored my portfolio. The only thing I had that he didn't mention in this is I do have a portion of my portfolio in US dollars, but that's a play on the Australia US dollar scenario if a liquidity event plays out. So that's slightly different. That's the only difference to Felix, the way he sees the macro outlook and how he's allocating capital right now. So how do I invest? Well, apparently I'm investing like a billionaire. And instead of me saying that, why don't we cut to a clip from this video with Felix Zulauf?
I think I'm not a gold bug, but I think gold will move in the next 2 years in a range between 2100 and 1700. And I said to our subscribers that by late this quarter, we will most likely have a buy signal for gold and silver. And I think if you can buy silver below 21 and gold below 1750, then you have a great chance to make a good return this year. I would expect gold to trade back up to about the former high, which was 2075 or something like that this year. After that, I think it will fall back again. Silver could do much more on the upside. It could go to 35 this year. So you could probably make 50% this year in silver. In equities, I'm slightly short, and I expect to stay short or add to shorts when opportunities arrive on all the bounces. And I'm looking for entries on the long side, sometimes in the summer period. And I would suggest that you buy the old darlings again, like the Microsofts and the Googles and all that. But you also have to buy the cyclicals and the commodity related stocks, the metal producers and the mining stocks and the energy stocks and those, because of what I said before. Oil could then run from 50, 60 to 200s, and I think that is going to be the second move up in the new commodity bull market. Commodities have been in a bear market from 2008 to 2020. So for, or even 20, for 12 years. We are only in the second year of a new secular bull market in commodities. And the first run up is almost over. I think we are in the last inning here on the commodity on the first run up, and then see a correction into summer. And in that correction, you have to buy the commodities again, be it the metals like copper and zinc and those, and oil. And you have to also buy some of the agricultural commodities, because unlike the crowd who believes that it's getting warmer and warmer, I think the next 30 years it will get cooler, and we have high volatility in temperatures, and we have droughts in one areas and rains in other areas, and this damages harvests, and therefore we have a supply problem there too, and we have relatively low inventories also. So I think this run, the next run in the commodities, will go hand in hand with a declining dollar, and the capital will try to flee the US dollar, the currency, the fiat currency, into real assets, and it will go into commodities, and therefore the whole commodity arena will be very exciting in the next 2 years.
Okay, I just want to pull on one thread here. Heard that argument before, understand it, actually personally believe in it. I'm just curious if the commodity complex is having like a really nice, phase 2 run. Why did you think that gold would go down in that environment, if I heard you correctly?
Yeah, gold has not really corresponded with the money printing efforts of the central banks. That has been a big blow to the gold bucks, because everything that happened, if you told the gold buck 20 years ago, he would say gold would be at $5,000 or $8,000 or so, and it didn't happen. I think it didn't happen because of the cryptos coming into play. They took the cryptos were eating part of gold's lunch. Mm-hmm. That's one point, and the other point is that all the other asset classes like stocks were working so well, and that's why nobody had a reason to go to the hedges, the gold, and I think. There is an 8-year cycle in gold, and the theoretical low is 24. So I think from 24 to 28, you will have a tremendous explosion in the price of gold. And that goes together with a decline in the stock market that I see, and the problems that we talked about before. So I think at that point of time, money flows into gold to hedge against all the unpleasant happenings. Events that are materializing at that time, and then you want to own gold, and you want to own the gold miners. So that's why I recommend that you accumulate the gold miners here until early second quarter, from here into second quarter on weakness, and you build a portfolio, and you can run it and hold it to 28. I think you will make manifold your money on the gold miners. So I think it's going to be the outside investment asset against declining equity prices at that time. But it's too early for the big run yet. The big run in gold will come when the big run in equities is over.
Is over, right? And all that capital needs to go somewhere. Yeah, exactly. And we'll be frightened and seeking a safe trade.
So some wise advice there from Felix. And as I said, my portfolio is just about the same, other than I'm holding some US dollars. So I'll put a link in the description below to both parts of this Wealthion interview of Felix Zulauf. I highly recommend you guys watch it. Felix is one of the sharpest minds when it comes to allocating capital. Now, I shared this tweet from Jared in a previous video. Now, he's talking about his own portfolio. The combination of gold miners, silver, and silver miners make up about 30% of my portfolio. I have a hunch that what's coming next will make it feel like it's not enough. So, you guys know my portfolio. You know how I trade. I've got videos on here, how I sell options. And I've been doing that in the last couple of months, and it's been working out really, really well for me, actually. You've seen how Felix Zulauf has invested. And here you can see Jared. How are you guys invested? Love to see your thoughts and opinions in the comments below. If you like this video, please hit that like button. Really do appreciate it. Take care, guys. And I'll see you all again on another episode of Finance Uncut.